Oh, finally, this feels good, man. Doesn't that feel good? Finally that we're seeing a little bit of green for now, maybe the third day. As I'm recording this video, the market is about to close literally in 30 seconds. And as I'm looking at the indexes right now, the major markets, things look pretty good. So we're gonna go over exactly why stocks are rebounding, why some of your favorite stocks may be, in for another big rally based off of the news that came into this morning, pushing this rally, pushing stocks to kind of bounce quite hard, I should say, by looking at the major indexes. So let's just jump on Market Watch and see exactly what we're looking at. So market closed officially right now, and the Dow Jones just jumped 1.6%. Gaining at some point intraday a little over 620 points. S&P 2%, Nasdaq a little over 3%. At some point was over 3.4%, and all very very hot, which we'll see how you can play about it on other stocks based on a video I posted a couple of days ago. So what happened? All right, what happened? If you look at the major gainers today, you will see that these are the retailers, companies that posted earnings such as Dollar General. Dollar General, best ever day and performance for the last 5 days, up 14% today. This is Dollar General. And then Dollar Tree, 22% on the day. Best performance as well. And then Macy's, 20% also day, after earnings beat expectations. And then you have Best Buy, which didn't do as well as the others today, but if you look at the last 5 days, up almost 11%. And then Dick's Sporting Goods also, strong day, 8% today. And then for the last 5 days, only 6%, but earnings were really, really solid for all of these companies. Now, what does this matter? It does matter because some of the reasons behind the market setting of behind, people taking money off the table on the stock market was because people were kind of, afraid, were worried, people were concerned about, is the economy still strong, as we, are hearing from the Fed? Because when we look at earnings from the big retailers, the big chains, Walmart, Target, Ross, I mean, they were crushed like 20, 30, 40% down just on earnings news. Why? Because inflation, but now that we have these companies, Best Buy, Dick's, Sporting Goods, Macy's, Dollar Tree, Dollar General, especially for Dollar Tree and Dollar General, now the story around the fear of recession and the fear of inflation trying to bite, more than expected, the consumer in the US is not as bad as it used to be, or people will tend to think. Why? Because people that are used to, with high prices, people are now flowing Dollar General and Dollar Tree, which are now seeing huge expansions, because people can afford some, prices at, maybe Walmart, Kroger, Target, and Nordstrom. Now they're, moving to those type of stores, which means that maybe inflation has now started to speak, because if people are now looking for, discounts, less expensive, items, well, it means that maybe demand destruction, which Fed was looking for by increasing interest rate, is now here. So ultimately, this means maybe things looking good means the economy might not be going into recession, especially as the GDP for this quarter was revised, so we're expecting a 2% increase in the economy by the next quarter. So it definitely, if that's the case, means there is no recession. All right. So which will ultimately bring some more confidence into investors putting money back in the market. So that's one. And then ultimately, this means what the Federal Reserve is doing is not too much, it's not too little, it's just right there what we need to bring inflation down without breaking the entire system, because that was the main worry. And then finally, if people are now going back, as I mentioned, to, these Dollar Tree, Dollar General, and Macy's as well, buying clothes, it means maybe people are trying to go back to work again, pointing to the fact that inflation may have peaked. Because if prices are high and you have one job, or maybe you are sitting at home still, depending on those huge stimulus checks we received a couple of months ago, last year, the year before last year. Well, now is the time to actually make sure you have some sort of income. So all to say that the economy may still be, may not be heading to in the wall, and the Federal Reserve may not be as aggressive. So those are the reasons why I believe the stock market is gaining, and we were due for a rebound anyways, a relief. Now, it doesn't mean that the market cannot continue to go down, but I believe that we have found some sort of, bottom of footing, at least in the short term. Now, what is interesting to kind of follow up for tomorrow is the PCE index, is the price consumer expense, and this is the preferred Federal Reserve indicator to see how inflation is affecting the consumer at the expense level. Because if this is going down as it is expected to be the case, based on the news we got today around, earnings from these retailers, around, maybe what the Fed is going to do, it will consolidate, the idea that inflation might be behind us in terms of, continuing to grow. So if that confirms tomorrow, then I believe we're going to have another strong day going into this long Memorial weekend. And maybe the short sellers can get crushed, which means another rally, maybe 10%, maybe 20%. We don't know, but things look good. That's the point. And that feels good. So see you in the next one, folks.